Welcome to New England Home Finders. My name is Dino, and today we're going to talk about something that impacts almost everyone renting versus buying, and why waiting too long to buy a home could cost you far more than you realize. We'll also explain how rates in the fours and a buy-down mortgage can help make home ownership more affordable. But first, I want to explain to you where your money is going when you pay rent. Right now, let's start with a simple example. If you're paying $2,000 in rent every month, that's $24,000 a year. Now imagine doing that for 10 years. That's $240,000 paid to your landlord, not toward your own future, not toward your own equity. Even if rent never increases, that's money you'll never get back. That's why we say it's time to be your own landlord. Let me share two real examples. My daughter Rachel purchased a two-family home in New Bedford in 2021 for $396,000 at 2.99%. Today that home is worth approximately $569,000. My wife's first home on Fenway Circle in Brockton cost $40,000. Today that same property is worth around $469,000. The lesson: real estate over time has always gone up. Many people think waiting is safer. I once believed that too, and I was wrong. Looking at real estate trends from 1981 to 2025, history shows us one clear pattern. Real estate appreciates over time. Waiting often costs more than buying earlier. There are some critical mistakes buyers make, and avoiding them can save you thousands. Don't open or close credit cards before closing. Even closing old accounts can lower your credit score. Don't change jobs unless it's within the same industry. For example, you can't go from being a nurse to a realtor without steady income. And don't assume you don't need your deposit until closing. That's a common misunderstanding. Your down payment must be seasoned, meaning it should be in your bank account for at least 3 months. Unless it's a documented gift, never use cash. Banks must be able to trace every dollar. This is why working with skilled professionals matters. Someone who has tools and strategies the average agent may not. Here's a quick overview of typical costs. Before closing, you may pay for home inspection, $400 to $700 mortgage application fee, around $500 at closing down payment, often 3.5%. Closing costs, typically 3 to 6% of the sale, price, insurance, and prepaid taxes. Your attorney will provide exact numbers. A 3-2-1 buy-down mortgage is a financing option that reduces your interest rate for the first 3 years. Year 1 rate reduced by 3%, Year 2 reduced by 2%, Year 3 reduced by 1%, Year 4 onward. Original fixed rate applies. This means lower monthly payments when you need the most. The upfront cost of the buy-down is often covered by the seller as a credit to make the home more attractive, or the builder, especially in new developments. This subsidy helps ease the transition into home ownership. Key advantages include lower initial monthly payments, easier qualification, flexibility. If your income is expected to grow, the main consideration payments increase after year 3, and not every seller or builder offers a credit. That's why having the right guidance matters. Buying a home isn't just about today, it's about your future. With the right strategy, the right professionals, and the right financing, home ownership may be closer than you think. If you are seriously looking to buy the house in the next 6 months, reach out to us now.